So those are some stock ideas, but let's shift focus to the commodity markets now. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the natural gas prices. In the last 24 hours, have seen a sharp decline come in for this one, so much so that we are trading below $3 per MMBTU right now. And the Indian markets as well have seen a very sharp correction in this week itself, even as we weren't trading for one day there, and the international markets were. So we are trading at a 21-month lows right now. And for the year 2023, we already have seen a decline of nearly 30%. In last 6 weeks, we've seen 57% of a decline. And from the high of 2022, we're down by nearly 70% at this point in time. I do want to take you through those price moves as well. So it was in August 2022 that we saw $10 per MMBTU. In December, it was at $7, but currently we are trading at $3 per MMBTU. So it has been a very sharp decline from the kind of highs that we've seen, and especially in last 1 month itself, where we have seen nearly 60% come off in case of the gas prices there. But the markets do believe that we may be near bottom. We did have a warm start to 2023 winters, but right now the US inventories have seen a constant decline. 91 billion cubic feet is what we are looking at in sense of withdrawal. While if you compare it to the last year, the inventories are still on the higher side. The inventories are still higher than the 5-year average, but the markets do believe that as we move ahead from here, the web winters will expect more drawdowns coming into for the space. That's exactly what the weather forecasts are coming in. Freezing conditions at the start of Feb and until the first half of Feb. And that will mean a lot of inventories withdrawal coming in. The Chinese demand pickup has been yet another factor which continues to support the markets. At least the crude oil prices have been holding around that $85 to $88 mark because of that. The US refinery run fall, unplanned outages that we are dealing with is also something that the street will keep an eye on. And then the markets have seen strong US data come in last evening. The fourth quarter GDP numbers at 2.9%. The new home sales, which have seen a run-up coming into the markets, and the retail sales data, all of that came in on the positive side. The US durable goods at 5.6% was much higher than what the street was anticipating. And then the market will watch out for the OPEC and allies meeting, which also is on the 1st of Feb. So that day clearly is going to be very, very busy. And then on 5th of Feb, you have the European Union and G7 looking at putting a price cap on Russian refined products. So ahead of that, you are expecting jittery markets.
Manisha, this gas story is fascinating, isn't it? I mean, you know, the entire thesis of a recession in Europe has been appended by the simple fact that thand nahi padi. As they say, right? Thand kam padi to recession. What a time to be alive, and reporting on markets is absolutely bonkers. Well, we'll take another quick commercial break here. On the other side, in our special edition, What the World Wants, from Budget 2023, Latha will be in conversation with Russell Napier, co-founder at ERIC. That's an interesting conversation.